All right, well, good morning, active traders, and welcome to our live trading week ahead session. I'm Ken Calhoun, your host, live from Las Vegas, president of Day Trading University. Great to see a big turnout, folks, as far away from Germany, Texas, Nevada, North Carolina, West Sussex, England. Hey, Ian, I've never been to West Sussex, but sounds like a nice place. North Carolina and more. So, traders from around the world, let's go ahead and take a look at our hottest charts in today's markets. Now, the S&P has been going up nicely the last couple of weeks. Who can tell me, though, we've got double trouble. So I would be cautious, at least on Monday, because there's two bearish patterns at the top of an extended run in our S&P. What are those two patterns? Double trouble. First is this, second is here. For the fellow candlestick traders. You have 5 seconds to type in an answer. The answer is we have a bearish engulfing followed by a shooting star. So it's kind of like a speed break. We're still in a very strong uptrend. So price action, index action is strong up, but we got a little bit of slowdown here. So I would not be eager to jump the gun on initiating large capital trades on Monday. I'm going to wait instead to see where the Monday closes. And this is a very valuable writer downer. Get out your mount blanket, write it down. You want to see a 2-day high on the close on Monday prior to buying Tuesday and for the rest of the week. So we want to see a high above here on end of day Monday. If it's drifting down here, I want you to stay clear. Okay, that's an important tip. Now with that, let's go on and take a look at some of the strongest charts. One I want to lead off with is this one, INSM. And the reason is why we've got a gap continuation. And that's whenever price action goes up just a few points, and then it lights up and it keeps running up sharply for week after week after week. They can't get enough of this stuff, right? So very strong uptrend, good, strong directional breakout in price action. And this one looks like a winner if it takes out new highs. So this is INSM. What else do we see about this chart that we like? Well, the trends, one thing you look for is the direction of a sequence of trends. So you have an uptrend, definition of uptrend, moves up, pulls back, and then keeps going up. That's good. If you have one that goes up and then dinks around sideways, which they often do, you don't want to trade that. So you only want to trade new highs in this market. Don't get clever and try and bottom fish. This is not the market to do that in. This is the market to dump declining assets and roll money into successful breakouts like this one here in NuScale Power Corp. SMR, you can see a nice big epic run breakout here. And what I like about this pattern is a 3-candle pattern in which you have small, medium, and large candles in order. That's another one to write down and remember. And you see 3 candles in a row where they get larger in size in an uptrend. That's a sign of new institutional buying, especially when you see the big volume spike there. So good volume supported 3-candle breakout. That's a good strong buy if it takes out new highs in our week ahead. And again, probably not Monday, but on the Tuesday and beyond. Another thing that I want you to start considering, and I teach you guys exactly how to do this, I have for over 2 decades in my live trading open room, is how to look at sector strength. So for example, semis have been strong and our pharmaceuticals have been strong lately, right? So you can see Vertex Pharma is a nice runner. Again, this is that bearish engulfing pattern. Small candle followed by large candle. That tells you, especially a down, it's small followed by large, that tells you to stay clear unless it takes out a new high above the previous high. If it doesn't do that, don't jump the gun because often it'll just go sideways. So new highs is what institutional traders buy, and I want you guys to do that as well. I teach you what indicators and what patterns to use in more detail in the live trading room, but here's a good brief introduction with some outstanding charts to back it up. So I like Vertex, but it takes out new highs up there. Now this is one that you probably don't want to trade, though some of the small cap chat rooms have been all over it. ZAPP, Zap Electric Vehicles. That chart's more likely to zap your trading account than make you money, right? Bada bing. It's all over the place. Don't trade charts that are inconsistent. It's like don't spend time around people that are inconsistent. Go with things that are consistent day after day, week after week. Makes for a much easier life. If it runs up and then it goes down, odds are like you bought here and got stopped out there. You buy a bounce, get stopped out. Then you go short, then you get cover stopped out. Don't trade those kind of charts. Instead, we like charts like these. Now, this is a really especially good chart, AOSL, and this is Alpha and Omega Semiconductor. Yet again, the strength of sectors. Focus your energy as a trader and allocate capital. Spend more time scanning within the strongest sectors. And the reason is because that's getting institutional money flow from large market makers and capital allocation. So when you've got strong sector strength, like pharmaceuticals and semiconductors lately, those are the ones that you want to start rotating money into at new highs. And again, you don't bet the farm, you just bet a little bit. And if you're playing with Alice's money, double down a few days later. It keeps going up, great. If it doesn't, keep it to a tight stop so that you keep minimal risk and maximum reward with the best chart patterns of evidence and strength of price action that continues upward. And again, think about it too. Smart traders, guys like me, the Wall Street guys, we know what patterns work. What a lot of amateur traders do is try to outguess the market and think they're going to catch a bounce before anyone else gets it. I tried that. And for years, I realized that doesn't work. What works is simply follow the crowd. If everyone's buying and it's taking on new highs, don't think twice, just jump in a little bit and then scale if it proves it right. This is another good example of an outstanding chart for a swing and or day trading. This is AOSL Alpha, Oscar Sierra Lima, AOSL, a semiconductor in our current market. Now, here's a question that often comes up. Traders often ask me, how do I set exit targets? How do I know when it's gone far enough? Well, the rule of thumb that I use is I use 50%, 50% of the 90-day price action. So basically, you look at a 90-day chart, look how many points it is on the right side, cut that in half, and that's your exit target for breakout continuation on the upside. Odds are you will not get this much price action on a secondary run. Odds are it will peter out or slow down no later than 50% of this range. So kind of look at it like they're a brick wall, brick house. You want to put one brick on top of the first two. So you're doing 50% as the goal of the exit target, or at least tighten up your trailing stop once it's gone 50% or more. And it's my best trades that have done that, exactly that. Be sure to set trailing stops. So don't let positions in the money just wander loose out there in Wall Street, because they'll take your money back. So make sure you tighten up the trailing stop. So it runs up, you're in the money, tighten the trailing stop, it drops, you cash in, cha-ching. Yeah, also, I will be able to look at charts of your guys' choice. So ladies and gents from around the world, type in a few tickers. We got a bunch of them in already. And I will go ahead and pull those up for you as well. Okay, let's take a look at Amgen, another pharmaceutical. One pattern that I want you to look for is this one as well. It's what I call 3 green candles. You see 3 uptrending green candles, whether they're expanding or not, as long as they have at least 3 green candles in an uptrend, taking out new highs, that's a buy signal. That says buy. It's Amgen is saying buy me, right? That's exactly what that chart is saying. Now, trail stop would be right under this shooting star high, right? So that'd be, or hard stop would be right here at basically the low of this candle. A buy signal might be, say, 50 cents or so above the prior high. And you just scale in from there and build the position over the course of several weeks with an expected time duration of no longer than, say, all right, let's take a look at more. Here's another good one, SMR. We looked at Vertex and ZAP. We said don't trade things like ZAP. AGI, another good chart. This is one that a trader had asked about. It's a gold chart, Alamos Gold. I like, again, whenever you look for a trade, you have my word on this. I did over 120 million worth of order flow just 2 years ago. I posted my Fidelity, the tax return thing, the proof. I do a lot of trades. One thing you always want to look for is the right side, the most recent side of a cut pattern, and see what the texture is. Is it haphazard and random, or is it like this, relatively strong with a lot of green candles, climbing price action steadily and strongly up to new highs? Look at the recent week or so of the chart that you're trying to trade, and anything less than a good strong 45-degree angle type breakout should be left alone. You don't want something that goes up and down and you're on the fence about it, because other traders will feel the same way. Traders who want to make money want to trade things that go up consistently. Speaking from experience. And so charts like this that the last week or 2 weeks have been going through the roof, that's a good chart, right? Nothing but buyers in charge. Ask yourself, who's in charge? Buyers or sellers, or they don't know? Well, We only want to trade very selectively with a great amount of discipline and integrity of chart pattern recognition and the skills to get it right the first time. Uh, is looking for these kind of charts and focusing your energy as a trader only on those that have the best ROI or the best likelihood of making money for you, right? We've all been in trades that go sideways or go down. Let's stop the madness. There's got to be a better way. Let's look at charts that actually go up consistently and make that the foundation of your approach as an active trader. All right, let me go ahead and take a look at some of these tickers. If you would, we're going to wrap up here soon. What are some of the tickers that you guys want me to look up? So now is the time, if you have a question about a chart, type in the ticker and I will endeavor. We have a big turnout today. So yeah, huge turnout. So I don't know, I can't promise I'll get all the charts, but I will do my darndest here for you. We got Nu Skin, we got Pink. Thanks for the tickers, folks. Silk. How about Pink Silk? I digress. See NVIDIA, Costco, all good charts. Costco's been a monster, right? Costco, a monster of a chart. That's a good investment, right? I mean, from way down here to way up there. Costco, our favorite place to shop, or at least one of them. Now, this is a fall off a cliff, shooting star, so we don't want to buy this unless it takes out new highs, right? But it's a good chart. Okay, AMD. Thanks, folks, for the tickers. Let's see, IBM. Itty bitty machines. International Business Machines. Gilead, that's another pharmaceutical. Guild. Gilead Sciences. All right, now what else do we have? As you take a look at the charts, what I want you to do visually is compare whatever chart you may be considering trading against the type that I cover here each week. My goal is over the weeks ahead and the months ahead for you to slowly start to compress, kind of narrow your limit, narrow your field of vision to nothing but the best charts, right? I want you to, be the Cadillac, the very strongest charts that are most likely to do well for you. Costco's a rock star, right? Any questions? Costco's a screaming buy up here, obviously. Now this has that pattern of small followed by larger whole real green candle with high volume, taking on new highs in context of a 45-degree angle breakout that keeps skyrocketing up. So that's strong. Now remember, pop and drop is not good. If the chart and the stock goes straight up, it'll almost always drop to at least the midpoint for what's called a mean reversion pivot. You don't want those. You want charts like this, they're 45-degree angle breakouts, particularly when supported by large green candle bodies, right? That's awesome. Gilead, that's a terrible chart. I would lose money trying to trade this. I would. I mean, who can make money with this? This is called a hit and miss. This is a gamble. We don't want to trade that. IBM. I like the trend. I don't like the lack of range, but it's an okay chart. I wouldn't give it a rock star status, but it's still playable because the green candle here, taking on new highs. We're testing new highs. The long would be above here, right over here, and it's a play. That one's a go. And you. Concern about this one is it's what I call a caterpillar chart. There's too much. It's like it's fuzzy around it. It doesn't have the strength of a chart like say that one, right? It's like an eye test. Look at that chart. AOSL versus new. Which one would make you more money? Which one is easier to trade? The answer is always going to be the tightest, cleanest chart, like you get a piece of string or yarn and pull it tight, versus choppy charts like this. So these, I tend to kind of hit and miss on that type. So, by the way, if there's a chart pattern that you're hit or miss with, don't trade it. Only trade things that you consistently do well with. Now, Pink, that one would be kind of a gambler's chart. I like the gap, but I don't like the fade to the previous high. Too many problems. Silk looks like a buyout, right? If something gaps up and goes sideways, that's a buyout. So no. SMR is a win. Spiders is good. Vertex is great. Zap, that's one of those pop and drops we don't want to trade. All right, and one more. Let's see, TNA. These are small cap bull. I don't like it. Too sketchy. So remember, the charts that you want to focus, at least focus most of your energy on, are ones that are consistent. Like looking in the background check of a potential employee, if you could still do that. What's the consistency? What's their performance? What's their attendance? What are their performance against numbers, against comp? How do they do against plan? When you're looking at charts, you want to find charts similarly that have consistent performance, and just narrow your focus to the simplest, easiest, step-by-step charts that make sense. Again, this was a look at swing trading charts. We often look at day trading charts as well. And in my live room, it's kind of the opposite. We spend virtually all the time on day trading charts, a little bit on swing trades. So anyway, if you do want to join the live room, I would encourage you to give it a shot. It's at daytradinguniversity.com/live. With over 6,000 members since the year 2000 was when I first started. 2001 is where we got in a full gear, almost over two decades ago. So you can try it out. Money back guarantee. So I take all the risk, and it's via PayPal, so you can cancel easily if you need to, or if you want to upgrade, you can do that as well. So you can see a bunch of testimonials, hundreds and hundreds as well. So anyway, I hope to see you in the live room, and I hope that you do well in your trades moving forward. I'm Ken Calhoun. I'm going to wrap up for today. Thanks so much for being here. I appreciate it. Take care, and best wishes for success in your trades.